quickly bring in Dolapo Oni as he joins us to take a look at what is going on in the oil markets. Dolapo, good morning.
Hi, Bolaji. Good morning.
Thank you for joining us on the program.
It's great to be on.
Let's take a look at the oil markets. It's been volatile this week. I mentioned that we've been having a range of between $49 per barrel, $50 per barrel trade in the international market. Tell us your thoughts about this development.
I mean, there's a lot happening in the market, especially this week. We've seen some very interesting developments this week. Initially, when we started the week, there were some rapid purchases in the Asian market where we saw China oil starting to quickly buy some oil into storage because prices were around 50, and that sort of boosted prices. But as the week went on, I think they decided to cut some of that purchase. And in fact, yesterday, Vitol had to turn back a super tanker that was heading towards Asia initially because there was too much volume in the Asia region. And that sort of sent a bit of a shockwave into the market. We saw prices deep towards, in fact, they got into 48 territory yesterday as well. But yesterday was also another interesting day because it was also Super Thursday. There were a lot of data coming out of the UK economy yesterday as well. Mostly inflation figures showing that the interest rate still needed to be kept stable. There was no need for a rate cut yet in the UK or even a hike to some extent. So interest rates were kept stable. Inflation was still a bit low. That sort of sent a wave into the market that, okay, purchases are not really going that high yet. So everything was a bit negative for oil yesterday, and that's why we saw oil prices really dive down a bit yesterday. But they're back up because today we're waiting for U.S. jobs data. Not necessarily because U.S. job data will be supportive, because if we get a good figure from U.S. job data, it will actually strengthen the dollar, and have a stronger dollar always sends oil prices down.
Okay, let's quickly still stick to the global market scene before we come back home, if we can, in the next few minutes. There is a story that says that Saudi Arabia is not as rich as we all think they are. Now, the oil kingdom is said to be facing a big hole in its budget caused by the slump in oil prices and a sharp rise in military spending. Now, that's forcing the government to raid its reserves, and it may even borrow from foreign investors, according to analysts. What do you think about this story?
Yeah, thank you, Bolaji, because that's quite an interesting story. One thing I think we should get right is this. Saudi Arabia, as we speak today, currently has about $675 billion in its reserves. But they're raising a $27 billion bond, and that's really because they're trying to avoid running down their reserves. Their budget deficit, I mean, they run a budget deficit close to between 36 to 40 billion US dollars every year. So it's quite a huge budget deficit because, I mean, don't forget there's a lot of subsidies, there's a lot of free healthcare, free education, and so much in the economy that is subsidized. So it's a huge budget deficit. And if they keep burning through their reserves at that rate, they will definitely run out of reserves if oil prices stay below 60 for the next, say, 3-4 years. So they will spend a lot of money. So to avoid that, they're actually trying to raise some debt to do that. And I think this is them actually trying to dig in and say, look, if oil prices stay low, we are ready to stay in the market. It's not really about them not being rich anymore. I think that's really what they're sending a message to the rest of the world.
As a matter of fact, we're being told that half of the country's economic output and 80% of government revenue is generated by the oil industry. And now we're seeing a drop in the price of oil in the international market, $104 per barrel from the last time, and we have it right now at $44 per barrel based on the report that we have. And that seems to be largely responsible for the squeeze that the country is currently recording at this point.
Exactly. And I mean, typically, like what UAE has done, I think that's a trend we're likely to see. The UAE also they cut their fuel subsidies last month. They have expansive subsidies. They don't have as much reserves. They had just about $89 billion in their reserves when they cut those subsidies. But I think it's looking likely like something that may spread across the region. We may see similar decisions taken by Saudi Arabia as well in some aspects of the economy. Then we may see similar done by even Qatar and some of the other Gulf countries as well, because everybody is feeling the pain of the lower oil prices. There may have been a lag in when they started to feel the pinch, but I think it's clear right now that some of the free services, free healthcare, and so on, may have to now be charged for.
Okay, let's come back home in 1 or 2 minutes before we wrap up this conversation. How are we faring, especially those companies who listed in the oil and gas sector of the Nigerian Stock Exchange? I read out the numbers a while ago. Forte Oil, we have Mobil, MRS, Seplat. Are they affected by the falling oil prices in the international market at this point?
I mean, in the upstream segment, definitely. If you look at some of the figures we've seen for the likes of the Seplat and then Oando Energy Resources in Canada, it's clear that there's been an impact on their books because, take for instance, Oando Energy Resources, which if you were looking at them for the half year of 2014, this was a company that was still doing roughly about 4,300 barrels per day. But they've been able to grow that with the acquisition of Conoco to about 55 or 56,000 barrels per day. And you'd imagine that would have a very transformative impact on their balance sheet. But that impact has actually been muted with this. Revenues grew from $30 billion to 90, but the impact was muted because oil prices also fell 50%. So that spread all the way down to the books, and we saw their profit volumes. All profits also go up, but margins didn't significantly improve as they could have because of the price reduction, while costs and so on still remain likely mostly unchanged. Same thing if you're looking at cost sector as well. But if you go downstream, it's a different picture entirely. Downstream should actually be benefiting, but they're not because, again, we have our downstream issues in the country, the likes of Total, Forte Oil, and Mobil that have released their results. We can see that we've seen major declines in their profitability. This is mostly because, number one, volumes have dropped, while costs are still a bit high because even accessing the fuel, the logistics, and so on.
All right, Dolapo, thank you. We have to end this conversation. Thank you so much for your time with us on the program. Dolapo Oni there, the head of energy research at Ecobank Development Corporation, giving us his thoughts about the markets, the oil markets. And that is where we wrap up Business Morning. Thank you so much for being a part of the program. We do appreciate your time with us. Do have a splendid weekend. I am Bolaji Akinwale. Bye for now.